please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We'll also get the BTST calls going now for Ashwani Gujral and Mitesh Thakkar. We'll tell you what to buy or sell for reverse trade tomorrow. Ashwani, you go first. Thoughts on the index and individual stocks?
See, just case in point, Titan tried to recover all day, even went up. Now it's collapsing on the downside. Same with RIL, which was supposed to be a strong stock. So even stocks which are strong and which are trying to pull back are failing at higher levels. So that just shows that there is probably a bit more profit booking that's going to happen. HDFC is now coming off. For the moment, I think Escorts is a buy with a stop of 950, target of 975. HDFC Bank is a sell with a stop of 2030, target of 1980. And Kotak is finally seeing some selling. That's a sell with a stop of 1300, target of 1240. I think both on Nifty as well as Bank Nifty, short positions can be maintained and may even be carried home.
Okay, that's two banks on the way down and Escorts on the way up for Ashwani. Mitesh, what's your sense? I mean, now this is a very definitive second wave of selling. Clearly, the bulls haven't succeeded. What would your stock calls be now? Mitesh?
Yeah, I said I was not very keen to buy into the index when the first bounce back also. I think the index, is clearly showing signs of correcting along with the Bank Nifty. What is possibly holding out is, to a certain extent, is Nifty, IT and a couple of individual names. I have two buy calls right now. Apollo Tyres is a buy with a stop at 289.5 for targets of 303. While TCS is a conditional buy, so it's been consolidating nicely. If the stock starts getting past this levels of 3500, 3505, I think I would be a buyer here with a very tight stop at 3480 and look for 3550 as the target.
Okay, all right, gentlemen. So those are the half-hour calls, positions you can carry on until tomorrow. Anuj, I'd have to confide that now, I mean, I'm seeing what you've been saying, because this is a very clear second round of selling that's setting in. I mean, until yesterday, one didn't know the dust was still settling on the event. This morning, bulls were making an attempt. So how should one read this? The fact that large cap stocks, big banks, Reliance, these are big names that are witnessing some profit taking today.
And I'll say one more thing here. If you're thinking that the market is right now down because there's uncertainty in Karnataka, I think you're making a mistake here and you're not realizing. I think the market more or less has factored it in that somehow the BJP will form the government, and that's besides the point. The event is over, and May was a 5-week series, always volatile, and we sort of ignored for last 1 week what was happening in global market, because our eyes were only on the
Karnataka.
event. Now once that event is out, for last many days we're seeing big decline in a couple of emerging markets. The US bond yield, that's been moving consistently. I think the dollar index, the move on the dollar, all of this, crude moving all the way to, where it is, I think 78 or thereabout, 3.06 now on the yield. Remember, we were making a point about 3 when it had crossed 3. Now from 3 to 3.05 on the bond yield is a big move. For our domestic bond yield as well, we are at 8%. Inflation issues. So, these are all triggers. The market was heavy and it needed an event to be out of the way before resuming its correction. And it was so close to, its highs. It's completed about 80% of retracement of the correction. So the place was right and the market got a bit of a trigger. And once again, the point that, it was driven by an event, an intraday. When that happens, some smart money has decided to book big money. Now, this will be interesting because if it's still a bull market, then perhaps this would be the time where you start to put some money in quality stocks which are also falling. But I think this has legs to go on the downside before the market starts to recover.
By the way, there was an interesting news flash on JP Infra. We'll come to that in more details. It seems the Supreme Court has stayed liquidation of the company. There was a lot of tussle between the existing promoters saying, Mr. Gore saying he wants to bring in money and whether that will be allowed or not. One of the bidders, their deal being rejected. So the plot is really thickening around some of these companies. But staying with market right now, Siddharth, what we've just been discussing, and tell me this wall of domestic money that had been coming in supporting this market, is there a threat that could kind of dither a little bit? And the reason I ask you is because I've been speaking to a lot of fund managers, a lot of independent financial advisors as well. this whole changeover that's taking place in the mutual fund fraternity, where schemes are merging, names are changing, there's a lot that's going on out there. So in this interim period of confusion, is there risk that flows into funds kind of peter off maybe temporarily? Because that's a market risk then.
Right. So let me break your question into two parts. The first part is, are we seeing a secular move from financials, from the physical side to the financials, and is there a secular move towards equities? I think that is definitely on. Any retail meet or any of these meets that you do, you can feel it that, there's a complete new generation of investors who are coming in. Their thought process is very different and so on. Now, would that be just a one-way move where, every month you will keep having positive numbers or keep having higher and higher numbers? I don't think so. I think that also will go through its cycles where, for interim periods, there will be some more redemptions or people will be hesitant to put in money. So I feel that's what we are witnessing currently. If you look at the numbers, it would be evident that, in the last 3-4 months, when you look at the gross numbers, the redemptions have gone up quite a bit. And while the net inflows are still positive, the gross redemption, the ratio between your redemptions and the new flows, that's increasing. So those things are part and parcel of a long-term journey. But I don't think there is anything which seems which looks like a major risk in the near term from the domestic flow side. Okay.
Before we let you go, just wanted your thoughts on a couple of other stocks where you've had a positive view in the past. One is, the oil marketing company space. You think now that the election is out of the way and we have had the price hikes resuming, this is a good time to buy? And also your thoughts on Interglobe.
See, on the oil marketing companies, I think, obviously you rightly mentioned that, in the past couple of days, again started raising prices and all. So I think here, inherently, it comes down to your belief whether, the oil price decontrol is there to stay, or you think, the oil price decontrol is no longer there and you're back to regulated pricing. So, here it's more about taking a call. So if your sense is that, the price decontrol era is behind us and now we are moving towards a price regulated era, then you need to be definitely concerned about oil marketing companies. Otherwise, look at the valuations that they're trading at. They seem one of the biggest opportunities today. And, that was on your oil marketing companies. And in case of Interglobe, definitely we are, for an industry where the biggest cost item is crude oil, and where, Forex, most of your, cost is in a way indexed to the dollar. So when both these things are moving so much against you, and, even on the supply side, when supply is increasing in a big way, those things will impact negatively in the near term.
Index is fighting hard today. It's actually trying to break into positive territory. Let's see if it does that or not. Right now, still 14 points down. Amrish, before we let you go today, anything new that's kind of crossed your radar, whether it's earnings, any other idea?
In fact, see, I've been looking at the mid-cap and the small-cap side of the market, which has been underperforming for the last couple of weeks. And one can actually attribute that to a large extent to the mutual fund reclassification, at the same time like a tired bull unloading sort of a thing. And surely some people would have also panicked looking at the way these stocks have fallen and exited. But then I think new opportunities are actually building up out here, because going ahead, at least the next couple of weeks, if not the next couple of months, I actually see at least the mid-cap side outperforming the broader index. So I think it's time to really take your money bags and at least start investing in the mid-caps at this point of time.
Okay, Amrish, fair enough. Thanks a lot for your time today. That's the view from Amrish. On to some more market opinion. Then we spoke to Mahesh Nandurkar, India strategist of CLSA. He says that the market fundamentals are not looking good on macro front. And on the sector front, he says consumption stories will play out well over the next 12 months.
We are right now, the Nifty is just about 2% or so below the peak that we saw in the month of Jan. And I think, given where the macro has been heading, and, also given the fact that the bottom-up micro has not really improved as much as what the initial expectations were. While we talk about the earnings trend improving, but remember that the earnings revisions are still happening on the downside. So yes, I would be willing to take my money off the table at the current levels.
There is nevertheless a global growth story playing out. Even the higher yields and higher commodity prices are because there is aggregate demand increasing. So do you think that provides a bottom for our markets, can't fall below a level?
True, the coordinated global growth is playing out in the US. We've seen that happening to a certain extent in Europe as well. But remember, also with the coordinated global growth improving, also comes the possible money supply reducing a little bit as well. So as we have seen, the US Treasury yields are now a little bit higher than 3% mark. And if they move further from here on, obviously the attractiveness of the other emerging market assets like the Indian currency, etc., will reduce. Also, there is this possibility that if the growth picks up and sort of continues to sort of show strong momentum in Europe, there is a good chance that even the ECB will tone down its QE program. So while the global growth might be improving, but we need to be aware of the possible side effects as well, that the global liquidity conditions, the money flow will not remain as attractive as it has been over the last 3-4 years.
Do you get a sense that domestic flows have peaked out? I mean, even in the month of April, we saw about $2.2 billion of flows, equity inflows that is, which is much less than the average over the last 6 months. You think flows have peaked out, especially into markets like India?
Yes, so the thing is that as compared to the previous 6-8 months, we were seeing almost $3 to $4 billion a month. The month of April was weak. On an absolute basis, I would still say that a number of $2 billion to $2.2 billion number is not bad. But I think what we'll have to see that number in the context of is the possible equity supply, the corporate paper supply. Right? In the last financial year FY18, we saw about $27 billion worth of equity paper supply. And that was very well absorbed by the market because the domestic flow was very strong at $33 billion. Now going into FY19, our estimate is that the equity supply pipeline is looking as big as it was last year. So that $2.2 billion kind of a number that we saw in the month of April may not be sufficient if the equity supply continues to be at that level. But on an absolute basis, that number looks okay. But yeah, I think what we will also need to kind of figure out is, if there is sort of any headwind coming from either by way of the long-term capital gains taxes, which have already started to play out. Is there, some money moving into physical assets? Because there are some anecdotal evidence that the property markets are showing signs of bottoming out. So those are the factors that we'll need to keep in mind.
Mahesh, is there a safe haven buying, perhaps some consumption names, IT names, anything, or this is not a year of equities, you believe?
No, so on the on the equity side, there are clearly certain segments that will do much better than the broader market. My sense is that over the next 12 months, we will see consumption, stocks, consumption stories playing out well, because clearly over the next 12 months, my sense is that both the central government and many other state governments as well will follow a pro-consumption policy, a pro-rural, a pro-poor kind of a policy. And in that context, a whole host of consumer names, should do well. Obviously, the headwind for the consumer staple sector, which would obviously be, the best way to play the story, is the valuation. That many stocks are, in the range of 45 to even 55 times, P multiple. But if we do some analysis, it's not very difficult to find some of the relatively cheaper names, which are trading at about 30 times, 35 times, which are some of the plays on the consumer discretionary side, on the household durable side, even the tobacco sector. I think some of those names, I would say is a good way to play the expected sort of improvement in the consumption theme. That's one. I would also highlight that, we continue to stay quite bullish on the housing story as well.
Market is near the low point. It's recovered a bit, of course. There's just one stock which, it's made a bit of a habit of rallying in this 3 to 330 period. It's Hexaware. And what is really interesting about Hexaware now is that with the kind of move that you've seen today, it's more or less, recovered that entire correction that it had post that results, which is quite interesting. And the other interesting bit about Hexaware is that for longest there was this massive discount which was prevailing on Hexaware futures versus Hexaware spot. A lot of people were perplexed by that. There used to be about a 30-point differential between both the future and the spot. What has now happened is that with this move that you have seen over the last 3 or 4 days, especially in the futures, the discount has come down to about 3 points. And there's a good chance that that one now over the next 3 or 4 days perhaps bridges further. So that really is an interesting stock. Sorry, you were saying something.
No, Anuj, carry on.
No, I thought you wanted to make a point. Okay, so that's of course Hexaware. Sanjeev Bhasin of IIFL is with us on the show. Sanjeev, good afternoon. Let's discuss Hexaware first. On the day of the result, there was a massive decline, but over the next few days, we have seen the stock claw back. Your thoughts?
Yeah, so I thought the decline was overdone. You know, that 380, 385 was a very strong level where it had corrected far more than wanted. See, Anuj, the thing was, these stocks before the results had run up very, very rapidly, and whatever the results, I think there was going to be a sell-off once the results were out. Hexaware disappointed a little on the margin front, and I think that was the cause. But you know, it's a very strong play in the BFSI space, and given the vertical they are in, I thought, at 385, 390, it was the risk reward was favorably priced. You know, the mid-cap IT, I think, continues to be a sweet spot. We have an overweight on Mindtree and Tata Elxsi. Hexaware as a trading play, deserves re-attention around that 385. But like you said, it has, quite rapidly outperformed in the last few days. And I think now you should actually be booking a little bit of profit.
By the way, probably worthwhile to take a look at JP Associates right now. There have been some dramatic changes at the Supreme Court today. The Supreme Court is now asking JP Associates to deposit 1,000 crores. Could have multiple ramifications. Won't get into the legalese till we get our court reporters in. But it seems that now maybe the court is taking a view that existing promoters have a chance of setting things right, and they're allowing JP Associates to actually bring forward the money. So that could have serious ramifications for the resolution of JP Infra, and therefore a bearing on JP Associates' own fortunes. That stock's surging as we speak, almost 7 to 8% higher. Sanjeev, hi, good afternoon. I don't know if you have a fundamental view on JP Associates. If you do, then please share that with us. Otherwise, I have a different question for you.
No, I've had a coverage since a long time when it was 7 rupees, then 14 rupees. I also made people book profit at 25. But again, like you said, I think it's a very big positive that the management stays with the company and they have to, deposit the extra cash. I think they are making a lot of efforts to reconcile their wrongdoings, and the displeasure with the owners is being satisfied. I think this will go a long step, a long way in relieving giving the promoters a chance, and I would take that as a positive. So I think most of the resolutions which are taking place, some in favor of the previous management, some where the buyers are paying much higher and than the anticipated, like the Binani Cement or the Bhushan Steel. I think it's a win-win situation for the banks because they'll get more than they bargained for.
Okay, thoughts on BEML now, Sanjeev? Now that this whole Karnataka issue, and it's still a bit of a if and but situation, from here, how would you approach the stock?
Yeah, so Anuj, if you heard any of the sane voices, particularly I have a lot of respect for Mrs. Karen Majumdar, and she said whoever the person who comes in Bangalore should see to the rural people, and that means that their most wanted attempt would be at the metro, because Bangalore is in dire straits as far as the infra goes, and I think that will be a very big win-win situation for BEML. So on any decline, whatever the politics, I think BEML stands to gain, because irrespective of who comes to power, I think the urban side is in realistic need of a lot of repair. So BEML becomes a very good proxy for that, and some of the other government contracts which should start to see much more impetus in the next few months.
Okay. Sanjeev, ITC or HUL, if you were to buy afresh now?
ITC, of course, HUL has come out with standout numbers. There is no running away that's a 1700 rupee stock. But we've had a continued coverage of ITC all the way from 255 to 60. Even today we think the EBIT margins on the cigarettes are very, very pleasing, and there are other verticals inclusive of paper, hotels, the Ariali, the FMCG, all are making ITC for a 320 rupee target in the medium term and 350 in the slightly longer term. But like you said, it's better to buy a basket. So one of our top picks has been Nestle, Asian Paints. These have performed very well, and we think that, with the index hitting, more stocks hitting new lows, these stocks are hitting new highs. So I would definitely buy a basket, but for us the top pick would be ITC.
Okay, Sanjeev, willing to buy PNB at 75?
So I think most of the bad news is in. It will make a double bottom close to that 70 level. Now if you have the wherewithal to sit through the next 6-9 months, where I think yields will start to fall and you may get more faster recapitalization, then it becomes a good buy. But given the scenario where rupee, bond yields and oil all are going against you, it would be a pass for the time being. Look at a bank like Karnataka Bank or maybe something like a DCB Bank. They may give you faster money than you anticipated because they are more prudent and there is more visibility on the growth over there. For PNB, it will all be about how fast the recapitalization from Government of India takes place.
Anuj, when you asked that question, I was just thinking, I guess there are moments in the market, right? You're willing to buy PNB at 75, willing to buy PCJ at 99. These are those questions that I don't know how many people have the answer to. If you get it right, you are very lucky. If you get it wrong, you get taken to the cleaners, right?
No, you of course put money in these trades with the knowledge that you are taking a punt and you are taking a gamble that may work, that may not work, and at some point it will be a doubler at some point. It's the second largest PSU bank in this country, but you don't know how much pain is left before that happens. I think this move that you're seeing could be the final sort of nail in the coffin, but no, not for the investors. I mean, give it a wide berth. You don't want. Look at the PSU bank index down about 3.5%.
Oh, absolutely. Well, with that, we're almost running into the market close. So let's look at the screen. The final count is about 60 down on the Nifty. Mid-caps much better today. Big fight back by the mid-caps. And of course, the Nifty Bank is where the headlines really lie. So what's your take on the way things have played out today?
See, ICICI Bank is ending below 300 and it's given up that entire, sort of post-result rally which dragged the Bank Nifty, and the stronger banking stocks also closed at the low point today. So will be interesting. Tomorrow is the weekly options expiry on the Bank Nifty. ICICI in fact was the chief drag on the market today, 4% lower on that stock. Reliance made lows of the day towards the end, which was quite interesting. 2% lower is what we had on Reliance. So Reliance and ICICI Bank dragged the markets the most. Cipla, Ultratech Cement, GAIL, Hindalco, they were down quite a bit. HPCL and BPCL were down about 2%. On the way up, it's the FMCG twins, HUL and ITC. ITC is actually ending with about 1.8% rally. By the way, HUL is now breathing down its neck in terms of market cap. 3.49 lakh crores, 3.5 lakh crore for ITC has always been the number one player. HUL is within kissing distance there. 3.4 lakh crore is the market cap for HUL now. So that is going to be an interesting battle from here on. We've seen massive outperformance for Lever over ITC, of course. What else then? IT is doing well again. So Wipro, TCS, they were higher a bit. But mid-cap was interesting today because that was actually outperforming index today.
Yeah, I think the one standard line is if you weren't going anywhere close to banks, you were probably okay. If you were, then you would have some pretty severe bruises to nurse, so to speak. So PNB 12% down, Bank of Baroda 5.5% down, Syndicate, Corporation, it's just a long list of losers out there. The one outlier, not a PSU bank, a different stock, would be Karnataka Bank. I think the market, like the management's commentary, was willing to believe them saying that they've priced in a lot of the asset quality pain this time around itself. So that's a 5% upswing on that stock. Other than that, some key earnings disappointments today included a Century Ply, 9% down on that counter. Once again, an example, the market is in no mood to forgive if numbers don't match up. Some other smaller names like a Maupin Labs, that was also a disappointment. That stock's down about 14-15%. Again, if you're talking about the winners today, because the reason I'm talking about winners is that the mid-cap index has actually done much better after many, many days. If you talk about the stocks that were moving higher, Indiabulls Real Estate 12%. That's, of course, because of hopes of a good buyback price. PTC India Financial Services 8.5% up. HEG has had a good session, 8% higher. Delta Corp 5.5% on the upside. Very strong day for Edelweiss. This stock has put on serious weight in this week, about 8-9% already. Edelweiss was up 5% today as well. Parag Milk has managed 4.5%. Decent numbers from NIIT meant that stock was about 4% higher. Actually, on that note, let me bring up its twin NIIT Tech as well, because midcap IT was an interesting play once again. There was buying back on the likes of NIIT Tech, Hexaware. Let's just pull up KPIT Tech as well. Most of these stocks have had a fair amount of green on them. If I talk about other key gainers, Motilal Oswal is interesting, 6.5% on the upside. SIS, 4% up over there. Jyoti Labs was a good number, plus the market usually likes the idea of a bonus issue, so 5% up on that stock as well. V-Mart Retail, smart mover. So that was also interesting. By the way, some of the erstwhile stars, Mishra Dhatu, if you remember this stock, there's a 5% up move on it today. Apex Frozen Foods, up about 12% as well. So lots of names on the upside. Of course, the down move on stocks like Adani Transmission, Reliance Communication, I mean, these were the names that continued. Shakti Pumps was a big miss on results, and the management commentary didn't help matters much, 9% down in that stock. And finally, I'm going to end off with some of the JP Group stocks, because there's a lot of news flow surrounding them. Supreme Court allowing the parent company, JP Associates, to deposit 1,000 crore rupees on behalf of JP Infra. So that's the ways these stocks have closed out, both in positive territory for what it's worth. So that's how it is. And it's a big fight back on the mid-cap side of the screen. But I mean, I don't know whether there's a signal that maybe the worst of the mid-cap unwinding is over or not, or just too early to say. It's just
too early to say that. Also,
yeah.
You know, you're looking at the mid-cap index. Advanced decline still
individual counters, obviously. Yes,
so
yes.
I think it's perhaps concealing a bit more than it's revealing. But let's take final thoughts then. Ashwani, your thoughts? Verdict for the day then?
See, the market is not collapsing. It's not that kind of market where there are 200 advancers and 1,500 decliners. There is stuff that is going up. So while financials are doing poorly and may do poorly as well, underperform the Nifty, but I think there's enough holding up the Nifty. It's hardly down 50 points. The other thing is that, you know, right now, I would think risk reward is good to buy the mid-cap ETF or quality mid-caps, because what the mid-cap indices are doing, they are moving sideways. So the first decline was a large decline, then you had a small rally, and this current decline seems to be you know, almost running its course, because it's been down for the last, I think, 10 odd sessions. So that way, you know, while financials and maybe Reliance, etc., could remain weak and keep the large cap indices subdued, I think, you know, mid caps could start to see buying from here. So still down market, but not everything will go down. So more, you know, two-sided market. On rallies you sell, on dips you buy, and that way, you know, you have stocks which are up for the day and ones which are down for the day.
Let's move to the all-important story that's coming in from the Supreme Court now. And this one concerns JP Infra. The Apex Court has stayed the liquidation of the company. Let's get Ritu to understand exactly what's transpiring here. Ritu, the plot is really thickening, but it seems that the court is now allowing JP Associates, the parent, to bring up some money.
Yes, in fact, you know, the Supreme Court had already asked Jayaprakash Infotech to ensure JP Associates, as the parent of Jayaprakash Infotech, to ensure that the home buyers' interests are protected. Jayaprakash Associates has been submitting sums of money over a long period of time, and now the court has asked them to deposit another 1,000 crore rupees by the 15th of June, all of this to safeguard the home buyers' interests. But the more important news is that the liquidation of Jayaprakash Infotech, that has been stayed. Remember, on the 9th of May, Committee of creditors meeting. The only offer on the table from Lakshadweep, which is a joint venture between Dosti Realty and Suraksha ARC, that was rejected by an overwhelming majority of the lenders, citing that the offer made by Lakshadweep was too low. In fact, the liquidation value of the company is 12 to 14,000 crore rupees, and the offer was in the thereabouts of 7,300 crore rupees, on the basis of which it was rejected. Now the liquidation of the company, because the 270-day deadline expired on the 12th of May, that liquidation was the next step to be taken for Jaiprakash Infotech, and that is the plan that the resolution professional also presented to the NCLT. Now there is a stay on liquidation. 4th of July is the next hearing. What happens from here? There are several options that the court could consider. There is an offer from the table from Manoj Kaur, the promoter of Jaiprakash Infotech, but that of course could not, perhaps not qualify under Section 29A of IBC. There is another option of selling the company even under liquidation as a going concern, or perhaps renegotiating with the with Lakshadweep itself. So there are several options on the table right now. The ball, as always, is back in the Supreme Court's case. So it is them that will have the Supreme Court that will have the final word on what is to be done with Jaiprakash Infotech's case.
Okay, all right, Ritu, thanks very much. So the
crude oil prices, which continues to make heat waves. We have seen the prices continue to hold above $78 a barrel. Slight weakness, just 4 cents below 78. But remember, this is yet another week which has been quite positive. We did see levels of 79 plus as well. There, of course, have been various factors which have been supportive, fundamentals as well as the speculative money. I caught up with Regina Mayer, who's Global Head Energy and Natural Resources at KPMG, started on talking about what her view really is on OPEC cuts and compliance, and also on where is the crude oil prices headed from here and the impact that we can see on sense of prices for India from that. Listen to a slice of that conversation.
I expect them to maintain the cuts. I mean, really what they're finding is the actions, while maybe not directly correlated with what they're doing, it's obviously having an overall positive effect. And I don't see them wanting to take any action that would have a reason for drawing that price back down. I mean, I think the Kingdom of Saudi Arabia is on record as saying they believe it should be 80 or higher. Obviously, that helps their prospects for their IPO. And you see some of the other integrated oil companies arguing that it's probably more of a 30. My personal point of view is it's 60 to 65 is more of a rational price, and you'll see more U.S. supply come on. That'll dampen that overall price.
That really seems to be the view, because there are reports suggesting that we could see the crude oil prices correct $20 from here. But then there are other reports which are also putting it to 90, even 100 for 2019. What broader range would you really want to work with?
The industry gets so excited, right? And they have such a short-term memory. I mean, I remember in 2014 when we were complaining that $100 oil was the new $20 oil because no one could make money at 100. And then we were saying it was lower for longer, lower forever, and now we're back almost to $80 per barrel. I don't believe it's sustainable. I think there's still a lot of emotion and irrational speculation that comes into crude prices. And there are obviously different sides that want it one way or the other. And the current price makes a lot of plays economic. Oil sands becomes far more economic again. Right. Ultra deep water is way in the money. And then, of course, shale, where they were sized to be profitable at 30 or 40, is well into the money. So that then, I think, creates more opportunity for more supply to come on.
Well, absolutely. And as they say, that crude is perhaps 80 or 90% politics.
It is. It absolutely is. So we have to be careful not to ride the emotional highs and lows associated with that.
Right. But talking about India then, and our dependency on imports is huge, 84 to 87%, right, depending on what month you're looking at. So with the crude oil prices on where they are, how do you see India in that light?
Well, I think it's a big challenge for India when you are in an environment where you are so dependent on external resources. And we have other markets that look like that, Japan, for example, as well, that don't have their own natural resource capabilities. So my strong recommendation is that a country like India has to figure out what's the overall portfolio of resource that I need, and how do I create a portfolio where I am exploiting my own natural resource, because you do have gas supply and reserves available that could create a huge potential for energy to offset some of the dependence. And then you look at what are you going to import? Does it have to be all crude, right? Can it be naphtha? Can it be refined products?
Or a more balanced mix, perhaps?
A balanced mix, so that you create a natural hedge in your portfolio while you're also implementing renewables, right? Things that you can do within your own continent or your own geography to fulfill energy needs, and then create a portfolio so that you're not overly dependent on one source of supply or, frankly, one supplier.
We've seen much of April and the first week of May, the petrol and diesel prices did not move in India. And many people, of course, put it on to the fact that there are state elections coming in. And we might see this as a trend, perhaps. But then again, petrol prices are at a 56-month highs. Diesel prices at a record highs is what we've seen day on day in last 3 days yet again. What is again a strategy that India needs to point in as we look at day-to-day changing prices mechanism here?
Well, I know that I understand that your market doesn't necessarily have full price transparency where that is passed on directly to the consumer, right? And you have taxes that are built into some of the energy prices, which is not different from other parts of the world. I mean, the U.S. is known for having gasoline taxes and things of that nature. But I think sort of creating the right economic incentive that allows the companies to provide the product with an appropriate return, but still make it affordable for your populace. Crude prices have started to, they've disconnected from, RBOB and gasoline prices. And so if you're not all about importing only crude and then creating all of your downstream products and you create this strategy where you might import some gasoline or you might import, naphtha, or you might import ethane, that creates more of an opportunity to manage that financial risk and make sure that things stay affordable for your folks.
I also want to talk about the whole power thing yet again. I mean, how would you look at that being an important part here? I mean, as you said, there is a vast change coming in here, but is the change good enough, fast enough, and impactful enough to change? Can it be a game changer as we move ahead?
I am super passionate about the topic of what we call energy poverty, right? The fact that there are still 1.3 billion people on the planet that don't have access to electricity. And electricity is one of the single greatest drivers of wealth creation, just to lift everyone around the world into a better state of being. And you have a tremendous opportunity here. I spoke to one of the clients who said, of the 1.3 billion, probably 0.3 billion are here in India. So the opportunity exists. It's a great first step to electrify the villages. But is that electricity reliable? Is it on 24/7? Is it accessible? Is it affordable? Does it go into, every home and abode? My understanding is we're not there yet. And that is the next stage opportunity. And it's incredibly hard, right? Getting the line to the village in the first place is the first step. But then making sure that you can get it into the household, right, without electricity theft, and I mean that's dangerous, right? You don't want all those wires hanging from poles and threading into a different type of an abode that you have here. So I think it's a good first step. The government and obviously the communities and the businesses agree it's the priority, but I don't think you can declare success by any stretch yet.
What are those few things that you're watching out now to look at crude oil prices? Because every small event, every news, even a statement from an oil minister tends to move crude oil prices a couple of percentage points.
But it wasn't like that until just 2 months ago, though. Remember? I mean, for a 12 to 18 month period, we were fretting as to why are geopolitics not reflected in the crude price?
Oh, yes.
Right? We had North Korea and South Korea and all the
And the crude wasn't reacting to all of that.
It was not reacting at all. And now I think it's overreacting.
Well, that is the view coming in from Regina Mayer, that the crude oil prices are overreacting to all that's happening in the global markets there. But let's get in one more view, and joining us for that is Fayaz Udani of Kotak Commodities. Fayaz, hi. Perhaps you heard that conversation. What is your sense? Is the crude oil prices overbought? Are the prices sustainable here? And are we getting really vulnerable when it comes to the price moves?
Well, I think the last week was a little volatile, and so is the current week. The volatility has come back to commodities. There is no doubt about it. It's not only crude oil, but across the major broad commodities, which we have seen in the international market. So the volatility will be there, and it will be higher as the time goes by, especially with the movements in the currency across the world. So I don't have any doubt on the volatility side. As far as the view is concerned, yes, the trend of crude oil is bullish and we are still intact on the buy side. To talk about the domestic market, MCX is a good buy at around 4780 for the target of 4860. The stop loss for this strategy is 4730.
Your point is well taken on the fact that we have seen very volatile other commodity prices also, and precious metals perhaps fall there. How are you looking at gold finally breaking out of that range, trading below 1300?
Yes, it's interesting right now, especially in case of gold, because our markets are quite different compared to the international markets. Broadly, international markets have been sideways to bearish in the last month or two, but in our markets, broadly, the prices have increased. So interesting. From a near-term perspective, we feel that the correction in gold in the Indian market will also be there because the Indian rupee is little oversold right now, and we feel that there will be some appreciation in the Indian rupee that should support the bears of the gold, and the active contract on MCX is recommended to sell at around 31,150 for the target of 30,920 and with a stop loss of around 30,310. Saying that the broad outlook for gold from a longer term perspective is still continues to be bullish for the Indian markets.
All right, that's nice to hear. But also, how are you looking at the metal prices? Because while the Chinese data has been on the positive side, would you say it really is about the strength in US dollar which continues to weigh this sector down?
Yes, on the broader front, it is the US dollar which is hovering around the base metal market, and in that again we have to be very selective in the commodity which we pick. So, being the bearish currency factor for the base metals, I think lead is a good sell. The inventories of lead has gone up on LME and SHFE over a period of time. The price structure has gone into deep contango in the last couple of weeks, so that indicates that probably the supply should be higher in the coming period and it should weigh on price. From the domestic market perspective, the May futures is a good level to go short at around 161. The target is around 157.8 and a stop loss is recommended at around 162.8.
All right, Fayaz, we'll let you go at that. So selling metals, precious and industrial both, but buying in crude is the strategy coming in from Kotak Commodities.